What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is May 8th of 2024. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I want to send a pretty honest and dire warning about where I see crypto markets heading over the next couple of weeks. And I think it's going to surprise a lot of people because I think that there's a lot of complacency in the crypto space right now. I don't mean to be harsh in saying it, but when I'm analyzing the price action, when I'm analyzing the current state of crypto markets, when it comes to the overt amount of dilution, of valuation, and also the lack of new inflows and liquidity from all the metrics that we have at our disposal, it's not really looking good. And I want to spend some time to break that down today so that you guys can take what I say, do your own due diligence, feel it out for yourself, and maybe make adjustments to your portfolio if need be. If you guys enjoyed this video, consider dropping a like. It's a great way to support the channel, and let's go ahead and kick things off. So this is probably one of the more important videos we've been doing here on the channel for some time, and it's going to build off of the theme that we've already been talking about here for the past couple of weeks and really the last month and a half. As the trend has continued to weaken here within price, this is probably the most essential thing you can analyze. Price will tell you much more than any other metric out there. We may be able to find headlines or data points or data science models that justify our opinions in one way or the other, but price action and its relation with key indicators like moving averages are showcasing how it's interacting with the average trend. And we can see that not only since back here in late March and early April, we had inconsistencies clearly at the 21-day moving average, which used to be that line of support for price to continue accelerating. But beyond that as well, we are still facing resistance for the past couple of trading days, like we were back here in late April, against that 21-day moving average at a lower range and at obviously clear lower highs. That is not indicative of confidence. That is not a sign that the bulls are in charge here. And it probably speaks to some of the data points we're going to talk about as we go through the video about a lack of inflows, new participants in the market, and an inability to really justify valuations at current levels. I want to again emphasize here that we have the ETF out there. We have the halving event. The halving event is now kind of baked in. It's helping Bitcoin's supply and demand adjustment, but we're not seeing that that's enough to really push us above the 21-day moving average. So a lot of our big catalysts that could impact inflows and outflows are kind of in play now. And we are very close. That 100-day, the more it comes closer to this 21-day, we've got a very short window of time where we've got to get above that 21-day and we got to start showing up to the plate, or the 100-day moving average is no longer going to act as support like it was back here, or even a range where after we dip slightly below it, buyers come in. I think the next level you're looking at here for Bitcoin, as we've talked about, is coming down to that 200-day moving average and deviating slightly below this prior range of resistance back here in the past, where we started to get buyers coming around 50,000. I think somewhere in that target range, around 48 to 50K, is where you could find buyers coming in. Right? So I'm not here to say that this is some doomsday, Bitcoin is going to zero kind of prediction. I think that, again, there's a chance that this could be a nice, healthy correction. We get a typical, this happens many times in Bitcoin, a typical 33% correction. We've seen this in history many times for crypto through previous cycles. And I think it's probably well overdue, considering that we've had a really massive price acceleration post the launch of the ETF, right? We saw a 90% move in Bitcoin's price. It's pretty expected that as those ETF inflows, as we're going to talk about, slowing down, that just generally speaking, irrespective of whether or not we have the ETF, that Bitcoin would see these types of corrections. And they shake out a lot of weekends, a lot of people who are really concerned, a lot of over-leveraged people. And this allows for large whales, large institutions to buy in the dip. And I bet you're going to see those ETF inflows start to pick up around there. This is just how they operate and think. And we've got to think like an institutional investor if that's who we're expecting to come in and drive prices higher. I wanted to go ahead and spend some time as well to talk a little bit about the kind of other signs of price action. This is really our first topic here. It's analyzing price before we look at anything else. And another way we can look at this is not only by looking at the market cap and value of other sectors of crypto, but also through dominance metrics. Now, as we can see from June of 2023 here to March of 2024, really when the optimistic trend really started to become more and more clear for both Bitcoin and altcoins and the broader crypto space and for risk-on assets, post the kind of euphoria and optimism that's come about since 2023 around AI, right, which has really kind of sparked this positive trend in assets. we've seen very clearly here that others coin dominance, this is measuring all of the market share dominance of altcoins, excluding the top 10 cryptocurrencies, and how much they make up of the market. That number has increased from around 8% at the lows to around 13.6%. However, we saw a stark drop back on early April, and I think this was the first indicative sign of a trend shift here, because ever since then we have not been able to get back above the 200-week, which was starting to service as support, and that is a really worrying sign here. It's led me to shifting my beliefs that instead of us kind of pressing against that resistance back up here and potentially kicking off an early stage altcoin cycle, that we very well could be repeating history, and we've got to come down and have a pretty harsh breakdown, whereby just like what we saw in August of 2019 to August of 2020, within a year we saw all others dominance go from 5% up to 10%, more than doubling its market share and dropping all the way, cutting down the vast majority of those gains to where we only went all the way down to 6%, just 1% higher down off those lows, generally speaking. So if we see something like that play out here, where the long-term ascending channel is in play for others dominance, that means we're coming down to 9.25% most likely, or even potentially down to 9% for others dominance. And that's going to mean a lot of froth, a lot of overvaluation that isn't justified, a lot of the speculation, the rampant euphoria that's been going on for the past couple months. A lot of that's going to come crashing down. It's going to cool down. We're going to get to better, healthier valuations. And that's going to really give us some great entries. But I don't think a lot of people are prepared for that scenario. A lot of people aren't prepared for a retest of the lower 9% range like we saw back here in December, or even coming back down to those lows. A lot of people are already buying what they see as the dip, and they see as the kind of buy the dip opportunity for higher price extension. And again, maybe that's in play here, as we talked about. Again, for those who are wondering about the question of, oh, what if we're wrong? What if we're wrong that things are going to keep going down? Well, as we talked about for a long time, guys, we do not mind buying after a clear confirmation above the 21-day moving average, both on Bitcoin and on other coins or altcoins. Right? We will happily pay a slight premium if the trend has validated itself, but it's not there yet. So we have to continue following the trend direction and wait for it to find an eventual bottom that's either incredibly close to typical historic corrections, like 33%, where we can find favorable entries, and we know that other buyers psychologically will likely enter those levels, or we have to wait for trend confirmation above the 21-day moving average. Great example of this, just kind of map this out and talk about the significance of price. We see here, for example, during the correction, post the launch of the ETF, the real move came after we built a foundation on the 21-day and then started to accelerate. So don't feel like you need to capture the bottom. We emphasize this a lot on the channel, but it's just another thing to keep in mind. Take a look at the actual market cap for others dominance. Again, similar story to Bitcoin, but even worse here. The 100-day is clearly crossing through that 21-day. We've already declined quite sharply from the relative highs back in March. The problem is that this isn't satisfying enough for buyers. This range is not where buyers are coming in an extensive way. And I think it showcases that we're not only going to come down to the 200-day, which is another $30 billion contraction in market cap, but I think, as we talked about here for the past couple of weeks, the kind of max pain scenario coming down here towards around $175, $180 billion, contracting another $80 billion plus in market cap for altcoins, or more specifically others dominance, right? These are really, again, the altcoin market as a whole, not including the top 10 plays. I think that that's what you're going to get, because that's going to be a 50% correction from the highs, from around $369 or $370 billion market cap down here towards $180 billion. I think that is very fair to ask for, and we've seen throughout history that other coins or the broader altcoin market has gone through these styles of corrections before. We saw this back in 2021, a correction of $420 billion in original market cap down to $136 billion, much worse than what I'm talking about here. So this is just one correction. You can go throughout history, even, for example, back here from the bottom range of December 2018, went up to 25 billion, came down here to 10 billion. The COVID crash from 23 billion down here to 7 billion. We can see again back here in 2017 from $8 billion down to 3 billion. It is very common, historically speaking, that altcoins go through these 50% flushes because their valuations are much more frothy. And when you're in an environment like ours right now, that is sitting right now where others market cap sitting at $264 billion, and every single day we're seeing new tokens being launched with fully diluted valuations of tens of billions of dollars, even when their circulating supply is hundreds of millions, if not $1 billion. to sustain that valuation, you need more users, you need more liquidity, you need more participants to come in the market. And if you don't have that, you are eventually going to have a very well-deserved healthy correction where a lot of these things are trading at excess valuations that need to come down. It's not me being a negative Nancy, it's not me being pessimistic. It's just the reality of things, right? So this leads me again to this key topic of price action being the center point. We can see again weakness here overall across the board in price action. We can see it again, the ETH BTC ratio, a clear, almost near engulfing candle, a bearish engulfing candle to the downside, clearing out all the gains we made over the past month of April against Bitcoin. And we're just testing right now on that 100-month EMA. If that breaks, if we do not hold at that range like we did back in early April, that is going to be your cue that Ethereum is well for in another 20% correction, roughly speaking, in its valuation. I'd say 15 to 20%, leading down to a third lower low from back in May of 2021. We've been talking about this for a long time, guys. Ethereum snapped through its 7-year long, I think it's 7 years, it was holding this line of support. And that's incredibly significant, seeing as not only did we break it, but we struggled multiple times to try to get above there, and we just couldn't do it. And that's why we've been staying away from Ethereum to a large extent, right? For any of the bullish positions we've been taking, we've been in plays that are outpacing Bitcoin in sectors like Memecoins that have been doing very well, right? And this is, again, I think why we've got a good amount of downside here. And the weight of Ethereum going down against Bitcoin like this, another 15%, not to mention if Bitcoin is correcting, you can start to see how if Ethereum is going to be correcting 15% against Bitcoin, which is already dropping probably another 15-20% from here, then others coins, right, really the deep part of the altcoin market, that's going to get hit really bad. So it's just me trying to put together these pieces, trying to put the perspective there. Another way to view this is taking a look at others' market cap. So we're getting really the altcoin market here divided by Bitcoin's market cap. And what we see is since back in December, other coins here in the altcoin space have really struggled for multiple months already. So the sign's already there, right? We can take it here to the weekly to get an even clearer picture here, right? That flush down in April really sent the signal here, but we are well below the 200-week. We really couldn't get above it and maintain above the 200-week, whereas this was acting as support in the past. This gives me all the signs I need to see. Right, even back here, we actually got above the 200-week, right? But this time around, we had less of a heated rally in the overall performance versus Bitcoin, and now it looks like the 100-month is just cozy. It's coming up. It's going to provide that cozy support for a potential double bottom for this to actually be able to extend higher in the long term. And again, I don't think a lot of people are prepared for that scenario whereby a lot of the gains they made on average are going to basically be removed and come down to these levels back in June. For those who even kind of timed the bottom on altcoins versus Bitcoin. And you're seeing this in a whole range of pairs here, guys. I mean, for the large cap pairs, it's abundantly clear. We could take a look at Cardano, clearly unable to get above the 200-week moving average here. BNB here as well, starting to stall at the prior all-time highs after making really exceptional move throughout the months of October to June. We can see it in XRP. We can see it in a whole range of different plays here. And even Solana as well, really starting to stall here and struggle at the 20-day. Can't get a breakaway from there and is testing right now in that 100-day for the first time since its trend really started back here in October. That 200-day is not very far away. And if those moving averages don't hold, there could be a lot of pain in some of these plays when people least expect it. So this is an analysis of price action here. Right? One of the best ways I can kind of put this in closing before we dive into the next topics, I don't want to just keep rambling on about price, but again, price is the most important thing here, guys. Take a look. This is a custom ratio I created, and I wanted to kind of measure, we were just talking about BNB and Sol. This measures really the top kind of 10 cryptos, or at least some of the large caps in the space. And so we're essentially taking total market cap, we're subtracting Bitcoin, we're subtracting Ethereum, and we're subtracting others' market cap. And this gives us a very clear picture that the large cap plays, right, essentially are not able to get above to their previous highs back here in May 2021, and have sent a very clear signal here to me that they're ready to go down to the next potential support level, which, again, TA is a bit subjective, but I want you guys to take a look at this chart here now. I've tried looking at it for a good amount of time. I can't find any level. If this doesn't hold here, like 350 billion, which is I think what the market is trying to do right now, if that doesn't hold, these plays are coming down to $280 billion in total market cap. The prior January 2018 highs of the altcoin cycle, and basically the support range of May to July of 2021. Percentage term wise, that's another 25% correction. That's going to mean a lot of pain for people's portfolios if that level does not hold. Right? A level here at around $350 billion. It's not going to be just a minor correction like we saw back over the last couple of days. It's going to be a real pullback. So the price action to me across the board is signaling this. I wish I could find some tidbits that look relatively optimistic. I think the performance maybe Memecoins versus the broader space, maybe a sign of some risk-taking and optimism. But otherwise, there's not much, right? There's a few outliers that are doing well in this market. That's great to see. We want to look for market leaders. But when you're having these large cap plays correcting potentially 25%, it is not going to fare well for any sector in crypto. No one is safe in that kind of scenario. Everyone is likely to get pulled down. So the price action is not looking very good. And the next thing we got to talk about is inflows, because inflows are what really drive price, inflows and outflows. Is liquidity moving into the space? Is moving out of the space? And what I see here in the major catalyst that has driven Bitcoin's price, and I know a lot of people think it only has a direct impact on Bitcoin. I actually, on the bullish argument, would say that if we are seeing massive inflows in the Bitcoin ETFs, that actually benefits altcoins as well, because the vast majority of Bitcoin, which are now trading at higher prices because of all the ETF inflows, that benefits altcoin investors as well, because a lot of that increased Bitcoin gets sold by some who have been holding Bitcoin long-term at higher prices, and they can rotate easily into altcoins in different plays. So that kind of positive euphoria, and you can see it within price action for Bitcoin and altcoins. There's a clear correlation as Bitcoin gets more and more confident, risk-taking increases, and altcoins start to perform better. But overall, if we don't have those ETF inflows, things start to get bad. And take a look here. Guys, just look at the daily numbers here for the ETF inflows. Like the last 3 days here. We take a look back on May 3rd. Not bad numbers, right? It increases 6K. Good day for the ETF, right? Definitely nice after multiple days. We don't have the data, unfortunately, here to show on screen, but days before, inflows were relatively not impressive, right? We had our first positive GBTC day, and then the next day, we dropped down to 3,000, right? Still not bad, not terrible, but a significant slowdown versus some of the days we were seeing back here in the BlackRock, IBIT ETF, Fidelity, etc. Right? So as we're seeing a weakening, obviously, in the GBTC trend, we're also seeing a weakening in new entrant inflows into the ETFs. And if you look here at what happened yesterday, on May 7th, we not only are back to negative GBTC outflows, man, the inflows just stalled. Now, I'm not trying to go off of one day here, guys. We can look very clearly at the weekly metrics here. We've got the Hong Kong ETF, which really wasn't as big of a launch as a lot of people were expecting. And if these ETF inflows don't keep up, if we're not getting those weeks, as we talked about before, if we're not getting the weeks where we're getting tens of thousands of Bitcoin coming in, you are going to have a very difficult time sustaining a $62,000 Bitcoin. You need those institutional inflows, because if the institutions aren't buying, right, and having them only drop the inflation rate for Bitcoin by about 0.7%, not even an entire percentage point, your big question is, are you going to have more net buyers, market buyers, or market sellers? There's always a buyer and seller on each side of the trade. But what I mean is people market buying in the sense that they're buying Bitcoin or selling Bitcoin at the best available price. Like, who is more eager to take the best available price on the other side of the trade? Buyers or sellers? Right? And if it's more sellers than buyers, right, if more people are willing to market sell, get out of the market more quickly rather than waiting for their bid or ask or limit order to get filled in the order book, that is going to drive trend direction for price to the downside. I try to kind of break out, there's a lot of lingo and language that's utilized in finance to overcomplicate things. What I'm saying here is that it seems very clearly, we see it with the lower highs, lower lows, the inability to get above the 21-day, the lackluster inflows versus where we were back, say, in February or March. We are unfortunately not able to maintain that consistent trend where there are daily inflows and that kind of euphoria and optimism, good exposure to Bitcoin as an asset. And how do you think that's going to fare for both Bitcoin's price but also altcoins? I think it shows very clearly that institutions are maybe interested, but the smart money who does buy the dip, they think it's going to go lower. And I think, again, just the price action for the past couple months has been indicative of that. And as we emphasize here, I'm going to emphasize on every single point here. We get above that 21-day, we start seeing the inflows coming back. Hey, I'm going to get my ticket. I'm going to enjoy the ride. We're going up. We're going to make some great money. And yeah, happily, we'll pay a little bit of a premium here. But right now, I mean, it's not looking too good, guys. Now, it's one thing to have relatively weak ETF inflows. The ETF slowing down is one thing, but we're just going to take it a bit macro here and step back into the broader economy, the broader macro sphere of central bank liquidity injection, and overall measure global M2. And what we see here is that global M2, if we're really kind of analyzing it here, since back in March 2022, liquidity has really had no trend here. It's set in these higher lows and these slightly higher highs here, but we're really just about, I think, like $1 trillion more than where we were back in April of 2022. So we went from like 103 trillion to 104 trillion. So liquidity has been pretty flat for the past 2 years. And I understand a lot of people expect that we're going to have a wave of printing soon. Some people believe on the opposite end of the spectrum that we're going to see some major contraction of liquidity where the Fed and thereby other central banks are going to be forced to contract the money supply extensively to deal with inflation. No matter what you believe here, let's just analyze it for what it is now. Liquidity is not expanding. There is not this huge injection of money into the system. This is M2. This is the broad measurement of money, one of the best we have. And because of that, financial markets cannot extend much further than where they're probably at right now. And this is a very important reality to keep in mind. I understand people believe, Bitcoin is like the honey badger, it doesn't care, it's going to do whatever it wants. Because Bitcoin is not the niche pet rock asset that it used to be to many people that was entirely speculative. It is a institutional grade asset now. It is, as a lot of people wanted to see, Bitcoin is institutionalized now. It is in ETF products. Anywhere you want to buy Bitcoin, except for maybe some money managers like Vanguard, which I think have kind of flipped their tune as well, you could get Bitcoin. You could easily sign up for a Coinbase account. There's Coinbase Institutional. There are OTC markets. There's the ETP products now, the ETFs that are out there in a whole range of jurisdictions where liquidity lives. Money will go where it needs to go. And if it hasn't really shown up here over the past few months, and the ETF inflows are starting to slow, and global liquidity is slowing, I think it's just a sign here that the times are changing here. I think another thing also to keep in mind as well, if you take a look here at the chart, we can also just take a look at USDT, USDC, right? Just take a look at the market cap of stablecoins here. And what you see is that since back here really in April, right, we can see the overall trend has been stalling here since this period in April. Around $144 billion, slightly higher from where we were back here in April 2022. So if that breaks in the 21-day and you stop seeing an expansion of stablecoin liquidity, that might be a sign or cause for concern, right? Another liquidity on-ramp here. This does play a role here. This $34 billion of injected liquidity since November has definitely been a measurement of new entrants in the market or pre-existing entrants in the market putting in more liquidity. But anyways, we've taken a good look here at liquidity and all these kind of key topics here, guys. But I want to talk about the third topic here, and I'm kind of bounce between crypto and the macro here, and that's the topic of concentration. Right? There has been a lot of liquidity going into specific trends, specific plays. When I talk about this on the macro sphere, when I talk about like global equities, I talk about the Magnificent Seven. Right, the 7 large stocks are talking about Apple, Microsoft, Nvidia, Tesla, Meta, Amazon, Google. These companies that have swallowed up a huge amount of market share, nearing I think around 25, upwards sometimes up as high as 30% of the entire equity market in valuation. Like a quarter to coming up almost a third of the entire equity markets in a few key stocks. So that when those stocks recover, broader NASDAQ recovers as well. But also when it gets hit hard, and you have some pretty substantial down days where things can move relatively quick if those companies and their PE multiples start to decline. We can see very clearly, this is a great measurement here of like the 2 largest stocks in the world. This is Apple and Microsoft. And what you see here very clearly is I think overall from prior history, this is something we share in the Dash report a lot. See very clearly that you've got this kind of trend change here that started in 2020, where previously, had pretty much like a decade of expansion in these names where they really swallowed up a large share of the market. And have since then, while they're still on an uptrend, no doubt about that, the trend is slowing down. The lows are much closer to one another than in the past. The highs are not expanding so rapidly. And since back in November of 2023, the market share of these two stocks has started to dwindle. And you're seeing clear signs, late stage signs of companies that are no longer growing, or prior growth stocks that are now doing extensive stock buybacks, utilizing cash in their balance sheet to just buy up their own shares rather than doing something productive or innovating. You were seeing, previously growth stocks that for decades didn't pay a dividend. Now Google and Meta saying they're going to start paying dividends and trying to entice more long-term holders and traditional investors. That to me sounds like a late stage kind of activity. It sounds to me like these companies are not at the forefront of innovation. They're no longer finding new revenue streams, and they've got to entice investors to essentially hold the bag while insiders dump. It's the name of the game here, folks. You will find that if you look back at General Electric, if you look back at all the major traditional market leaders of the past and previous cycles, you will find that dividends, stock buybacks, stuff like this, when it gets to ridiculous levels and starts to appease into the non-traditional investors in these companies, it's again a way to keep valuations temporarily suspended, but inevitably will lead to these companies losing more and more market share, underperforming against the broader market. Now, in the case of crypto markets, I wanted to talk about the topic of meme coins, because this to me is where I've made the majority of my money in this cycle. Meme coins are really awesome momentum trade plays. When you kind of realize that there's nothing fundamental about them, you can really start to focus in on price action. And I have to say, as a trader, I like that. But I have to say overall, guys, well, I definitely think, as I've talked about before, I'm not trying to say this is the end all be all for crypto, that we can't continue higher later on after we've gone through a more heavier corrective range or we get above the 21 day. The big thing I want to emphasize is that meme coins as a category, this is just meme coins, are worth $50 billion right now. $50 billion. Now, we have seen this metric higher when Doge was at $80 billion in 2021, and we had Shiba Inu that was rallying like crazy back then. There's kind of a few concentrated meme coin plays, Floki as well, back in 2021. But that was also a period of time where liquidity injections, whether it be stimulus checks during the pandemic, money printing, lower interest rates, all of these things created a much more euphoric state. And I think most of us would probably agree right now that even though M2 is at a similar range to, say, 2022, or maybe even slightly higher than where we were back in 2021, the velocity of money into investment assets, like the kind of surge of new injections of liquidity, people buying crypto, and the kind of risk-taking sentiment to hedge against all the money printing from the pandemic, there's a much different environment for where we are now. And one of the clear signs here of worry for me is that we've got a concentration of a few key meme coins here. We've got Dogecoin, Shiba Inu, Pepe, Dog with Hat, Floki, Bonk, and a couple other plays as we go down the list here. But really, in these top 6 meme coins, you've got about $40 billion that market cap. Okay, so that's a lot of market capitalization and liquid value that can easily start to correct here. And I understand we saw a great week here in these plays. It's still up over the last 7 days, a solid percentage from their capitulative lows. But you're also seeing some signs here of stalling on some of these plays. Still days where some of these are going up, going down, heavy single-digit moves like 5 to 10%. And I think, again, we just got to have an eye on those charts here. We take a look at Pepe, USDT, right? Look at how it reacts to the 21-day. If it can't make its support, right? If we see Dog with Hat, starting to see similar trends as well. Like right now we're testing 21-day. And you're not making new highs, you're seeing price weakness, it may be a sign here that there's an extensive amount of concentration in these plays and that they need to correct to lower levels. I get that feeling when I look across the board here at meme coins. I see it in the broader Solana ecosystem. I see it in a whole range of narratives that there's just a heavy amount of concentration in these plays. and you may very well may see some kind of correction in them. And I think that above all, one of the things I want to emphasize is that if you are going to be placing bets in these sectors, you need to be looking at small and mid-cap plays that give you that higher risk, higher reward profile. Because you're already kind of putting, I think, the riskier tail end of your portfolio at risk when you're going into meme coins, and you kind of accept that it could go to zero or it could have extensive corrections in the event that the trend doesn't continue higher. But I think if you're going to place those bets, you need to place them on the ones, or it's at least better to place them, in my opinion, on plays that have serious 10, 20, 30, 40, 50, even 100x potential in the broader event of an altcoin cycle and bull market. And I don't think you're going to find that buying Dogecoin at a $21 billion valuation or Shiba Inu at a $13 billion valuation. I think getting Shiba Inu to $130 billion market cap for 10x, or Dogecoin to $210 billion, or Pepe to even $30 billion market cap, that's going to be very difficult to do in this environment where liquidity is not growing, where inflows are slowing, where price action in Bitcoin is not looking good. So I recommend keeping an eye on the various different niche meme coins out there in the market. You guys know we've talked about a couple of them on this channel in our narratives video. You guys can definitely take a look back at that if you want for some of the plays that we are watching. And there's other plays as well. One of them includes the meme coin, which is Dot is Dead. This is one of the meme coins for the Polkadot ecosystem. If you guys haven't heard about it yet, I definitely recommend you guys check them out. But generally speaking, Dot is Dead, or Dead essentially, is one of the main meme coins for the Polkadot ecosystem. And I think what's really nice about this is that Dead as a meme coin, generally speaking, is one of the major few protocol meme coins out there for the Polkadot ecosystem. So you want to look for these kind of protocol-wide meme coins. Brett, for example, for the base protocol, which is Coinbase's kind of L2 for Ethereum. Right, there was Brett. There was a whole range of other meme coins that did easy 50, 100x's. And you want to look for those plays that really haven't had their rally yet. And you can just place small bets across the board in a lot of these different cryptos. And now Polkadot is one of our partners here in the channel for transparency. But overall, for Dead, this is one of many plays that I'm constantly watching here in the market across the meme coin sector. And I'm looking for plays that are trading at much lower market cap multiples, because in that case, it's much easier for example, a meme coin that's worth $20 million versus, say, $2 billion to be able to make that 10x, right? Going from, in this case, a $20 million market cap to $200 million versus a meme coin that's at $2 billion going to $20 million. You need a lot more liquidity, a lot more participants, a lot more exchange listings. So again, I'm all for making these kind of meme coin trades, but I got to make sure that I've got the better risk reward set up here. I wanted to also take a look here kind of in closing to talk a bit about some of the trend indicators here. We can see very clearly on the year-long time frame for the altcoin season index. This is how I prefer to look at it rather than the shorter term or monthly one. We can see very clearly that we haven't had what would typically be defined as an altcoin cycle. So there's good news here as well. And the point I'm making today, which is that not only will we have potential opportunity to buy at lower levels, and price is signaling that to us right now, at least from what I can interpret. But outside of that as well, we may very well still have that further continuation, new highs. We can have that altcoin cycle. Even if the circumstances right now may not be pointing to that with global liquidity, things may change, and we've still got that opportunity. So I think that there's a positive silver lining here, and my point. And outside of that as well, when I take a look at Bitcoin, I also see a scenario here where we might be, when I'm looking back at these cycles throughout history, I see a lot of similarities here to the run-up we had in 2013, in April of 2013, where we got up here on the CBBI historical chart. This is the Colin Talks Crypto Bitcoin Bull Run Index. Colin's a cool guy. He does some really great macro research in the market. And he put together this really great composition that takes into account a lot of the major Bitcoin data science models. And what we see here is a top out around the 87 point range. We weren't too far off here around 82, where price got overheated in the short term. And what we saw is a pretty extensive correction from $200 down to $70 back here in 2013. I don't think the correction is going to be that painful, but I think you could see one of these kind of shocking pullbacks that surprises a lot of people. Price stalls for a little while, builds its new foundation, and then it could surge higher here as institutional inflows ramp up. Maybe there's more FOMO in the air. Maybe there's more talks of monetary easing, debasing the money supply that could stimulate Bitcoin going higher. So we can see here again, this is just something to keep in mind here, some important tidbits to watch for. And also when I'm looking at the yield curve so far, No serious warning signs. I mean, of course, obviously, the chart is screaming that eventually we're going to have some pain. When this starts to shoot up and uninvert, that's going to be really your go-to signal that we're in a recession, to stay away from risk-on assets. But for now, we're just looking for buy-the-dip opportunities. So long as this remains in this range here, we will continue to maintain optimistic on the more kind of short-term trade trajectory, so long as this continues to hold it here, and we'll look for those nice capitulative buy the dip opportunities. Others market cap here, right? Clear scenario here, looking like it's going to come down here towards the prior support range at 175. It's about a $90 billion or $85 billion correction. So just, I'm only here today, guys, to do two things. One, to share what I'm seeing with all the metrics that I watch for: price action, inflows or outflows, keeping an eye on excessive concentration and excessive dilution as well, like new plays coming on the market, launching fully diluted valuations, just total junk. VC invested coins are just unloading on the market, enticing people with airdrops, using it as a marketing tool. And then I also want you guys to be prepared, because it's one thing to get caught in to avoid getting caught in a correction on the downside and locking in profits. It's another to have your liquidity ready. It's another to be prepared to buy the dip on these plays, knowing at what ranges on these indices that we're tracking, these data science models and different data points that we have, when to start getting in, because at that time no one's going to really want to get in. Everyone's going to be fearful. Everyone's going to be unloading their positions. People are going to get liquidated, and that's where you have almost a forced transfer of wealth to smart money. And I hope, above all, guys, that I can help with the best of my knowledge to get you guys towards being that smart money. I know many of you are smart. If you made it this far in the video, you guys obviously have the dedication to sit down and listen and hear me out on this, and I appreciate that a lot. I know that means a lot that you guys put that trust in me, and I don't take it for granted. So I really want to do my best to help prepare you guys for those scenarios. And again, if you're ever wondering, I get this question a lot, and I definitely want to do some videos on this channel as well to talk about this. But if you guys are interested to know which plays I might be buying on the dip, you could definitely check out the top altcoin narratives video that we did a while back, and kind of the different areas of the altcoin market that we're interested in. A lot of juicy content in those videos, especially the one where I really broke down, I think it was the top 7 narratives that we're watching. But I will be, as we get that correction, and we'll be looking for those plays where we could really start building some solid positions. And I'll do my best to kind of let you guys know what we're watching for. If you guys want to track my exact trades, you can check it out on the Dash Report, our newsletter here on this channel, when I send out trade alerts and all kinds of different resources. We have a 20-page plus report every month. We do a mid-month webinar where I answer questions, and you guys can get 20% off at the link down below in the description. But another thing on the topic of being prepared is to have an exchange where you've got that liquidity and you can really start buying into some of the plays that you're looking for. One of them that I recommend that you guys definitely check out is one of our long-term partners, DGate. Now, I'm overall someone who's pretty skeptical of centralized exchanges. I don't like to put too much liquidity on centralized exchanges in the crypto space. And when I'm moving liquidity from, say, like my bank account and crypto, I really want to have a home in DeFi where I feel comfortable putting some liquidity and being ready to really buy the dip on a whole range of different plays. Not to mention having the listings, the tokens available, so I can actually purchase them. Well, DGate is essentially the Uniswap for those who do order book trading. So for those of you who are like myself, who'd like to send in limit orders, who'd like to have more extensive orders other than just market buying, and also want to be able to trade a wide range of altcoins and also apply some unique strategies beyond just trading, then DGate is the exchange for you. DGate has got a whole range of major cryptocurrencies here, from some of the top meme coins to deep in plays and AI plays like Render, as well as large major protocol plays, some of which I wouldn't be able to get access to from most major exchanges like WorldCoin, which was a really great top performer so far in this cycle, and a whole range of other cryptocurrencies here, really accessed from one clear exchange, and with some really solid liquidity as well for the vast majority of traders. The key thing I would say above all, guys, is that you can explore a lot of cool things like their DCA feature. If you want to average in when you see those capitulation events, to maybe average in over a shorter window of time, or maybe just do passive DCA if that's your thing. You can also do grid strategies where you can get really solid passive yield, providing liquidity to the order book. There's all kinds of really great things that you can do within DGate as well. And obviously as well, there's the DG token as well for the protocol that I definitely recommend you guys at least check out and understand how it plays a role within the broader DGate ecosystem. But for me, this is definitely one of the exchanges that I would recommend you guys keep on your radar. Maybe give it a test. And the great thing is it's low gas. It's a fast L2, and one of the most trustless in the space. That's a big thing for me. If you look at L2 Beat and some of the ratings for DGate, when it comes to its security versus other DEXs, you will see that it's one of the most trustless DeFi protocols here that has this order book functionality. That to me is very important. So anyways, guys, feel free to check it out down below in the description. Check out DAD if you guys want. Check out some of the things we discussed today. But that's it for today's video. If you happen to enjoy it, consider dropping a like. It is a great way to support the channel. And I'll see you guys back here on Monday next week. Take care, everyone, and I'll talk to y'all soon.